historically over the big picture, they're not they're not as large as if we think back to the 80s and 90s, but
Right.
um, when you look at sub 3% interest rate 6 months ago, right? And in inflation, we can argue whether it's 7 to 9%. So yes, it's 6%. The real inflation rate, the real rate return on a 6% versus a 7 to 9% inflation rate is certainly less. But I, uh, one of the guys from Fortune made a comment the other day, and it made a lot of sense that I got to remember his name here. I want to credit him with it.
I'll
Historically,
just,
we're at
you know,
we're at one of the highest prices for houses relative to people's income, and income isn't keeping up as much, right? And with that said, um, over time, the historical inflation rate I think has only been about 3%. So if you lock in a 6% right now, it may in this little snapshot of time be decent relative to inflation, but when inflation pulls back to 2 to 3%, it's not real good. So the people that got the best value were all the people that locked in rates at 3%, 3.5 or under over a long period of time. Does that make sense, Matt?
yeah, and they're probably the discussion around that is we're making. I think we're making an assumption that the people won't give up those mortgages, but I think that's a bad assumption.
You
And
also
that the people are going to stay put because they want to keep that mortgage. But if you're talking about
people move every 5 years.
yeah, and a point and a half on interest rates move a point and a half every years, 2, 3, 4 years anyway. But I think that's not a reasonable assumption to make. The house is going to get stuck because of mortgage rates being where they are.
What happens is something else can happen. The price of the homes can drop too. So what Lance Lambert from Fortune, which I like following, it says it's not about the numerical rate; it's about the new monthly payments. These mortgage rates plus frothy home prices put new payments in the upper bounds of history relative to income. And I think where we're sitting right now, in the snapshot of today and time, that's a pretty interesting and true statement to look at, right? So
Yeah.
something will have to give somewhere over time.
Well, if you look at, I saw a thing the other day that was said that the between see between interest rates and the cost of homes going up over the past year that the monthly payment's gone up over $800.
Yes, yes, and the whole point is are wages keeping up with that in inflation versus the payment, right?
Well, I got a theory about that too. That last year, all through the pandemic, we got free money and trillions of dollars and wage increases, and McDonald's is paying $20 an hour to flip burgers, and now the new minimum wage is $20 effectively, and inflation just took those wages back. That's all it did. I mean, everybody jacked up their wages from $7 or $12 an hour to $20 an hour, and because they had to pay more, everybody's prices just rose to cover the payroll, and it was just swapping dollars. That's my
Yep,
theory.
no doubt. Were you able to send your link out? So I'll
Yeah,
wait for people to start rolling in here, and
yeah,
we'll start it. So looking over, you listened to the show yesterday. Let's talk a little bit about today. What we could talk about a little bit on your guide. How is the guide coming? Are you guys starting to backfill more data? It looks like you've got a lot of numbers on here.
yeah. I got a good team of scouts. That's what I kind of refer to them as. They want to kind of remain anonymous, but they're just some really good guys, boots on the ground guys that are on the wholesale side of the market that are giving some really up to date information and pertinent information. And it's I've offended a lot of wholesalers in my career by using that talk your position um, stance about you got to be careful about when your seller's trying to sell you something or buyer's trying to buy from you. Everybody's got a position they're talking, and you just got to be aware of that. And I don't mean to offend anybody by that, but it's just part of the business. I did it, and you did it, we all did it, but you got to be aware that that's part of the sales process. And so I just wanted to
So,
back up
see
here.
here.
That's right.
Donnie Nixon says hello from Conroe, Texas. isn't there a big lake in Lake Conroe? Isn't that a big? I always used to fly over that going into Houston, I think, and see the big old lake down there. And good afternoon from the Florida Panhandle, Joe Rish. Hey Joe, welcome as everybody's streaming in here. I'm thinking those may be some of your
We got the
so Matt,
South couple.
what one thing is for sure in this industry, you're definitely going to get different opinions differing from yours sometimes, and that's just life, right?
Yep, and that's kind of like, I mean, for me anyway. If I don't get differing opinions, then I'm stuck with my own. So what changes my mind or helps me reinforce what I think is hearing these other opinions. So I during the show today, I invite people to participate and encourage you to give your point of view. If you disagree or agree or just want to be heard, you don't have to listen to us the whole time.
Yeah, no doubt. So let's talk a little bit about what's going on the lumber side. It seems that and I don't want to rehash what we talked about yesterday, but kind of some of the things are the same thing to talk about. The rate of change is kind of slowed. And it makes sense because when you come from such a high level, it comes down. You've got more consolidation. You have more groupthink. You have less big companies buying inventory. They're still trying to liquidate high-priced inventories. This is always hard for me to understand. It's hard. They want to sell the last stick of 4-digit wood so they can start buying some 3-digit wood, right?
Yeah, and
And
it's going to come in. It's going to come in while they're sleeping overnight.
yeah, and I totally get that. So, there was a feeling out there, and I talked to probably 10 to 15 buyers yesterday, and they're all on the side of if I had to make a decision today, I'd probably want to buy something instead of sell something. And that may just more or less be because you look out in the yards and you're running on fumes in some cases. And then some of the other people, like Matt Beamer, who I think is pretty astute putting wood on the ground, he's like, hey, I've just made a decision that going forward, there's going to be less business, not as much volatility. So I'm not putting the same chunk of wood on the ground as I put before. And,
Yeah,
you know,
that's my little column that you got there in front of you is entitled "Lean, Leaner, and Leanest,"
yep.
and I think that kind of describes what the market's doing. People say they need to buy lumber, but how much do they want to buy? They want to go from leaner just back to lean, and never did really get to leanest. But I think the it's like I refer to as filling up the bottom of the barrel, but nobody wants to fill the barrel back up just enough to cover the bottom and be safe. So to me, it's creating a situation where the market's going to become incredibly volatile between now and the end of the year, where you should be. I mean, the rally we're in the middle of having right now is already petering out after a week.
Yeah, and look at I don't know where the market's going personally. It feels like we've sold off a lot, and I was starting to get that spidey sense that we could bounce, but then kind of Riley walked me back a little bit, saying, "Yeah, but what to wear, right?" Like, like so there are people buying, and he said, if you have wood on the ground, you certainly people will pay you to get it there quick, but he's not seeing the same uh, willingness to fill the coffers back up. Now, with that said, you know transportation on trucking has definitely got better. Um, Rates have gotten better. I don't know how long lived that will be. Rail is better just because there's not 10 people trying to exit, 10 people trying to fit through one exit at the same time. It's more subdued, even shipping. I think people with contracts because of the lesser volume are almost relying on their contracts. Here's maybe you can help me answer this. This is the hardest one. We were sitting around Greg and I on Sunday night just talking, or Monday night. He said, Ash, he goes, one of the hardest things is everybody that had contracts, now they're 40, 50, or 60% contracts 4 or 5 months ago is 110% of what they need. So
Right.
they either back off the contracts or they run it down and then they call a mill and say, I need 4 cars or 6 cars or 20 cars. And the mill says, put it on your October contracts. So there's never actually any price discovery. It just goes into this abyss of this pricing that somebody else prices in the future for them, right?
Right. And where do they get the prices from? I mean, you got 80% of the products now, probably arguably 80% of the product is on contract because the big guys are getting bigger. And that's just the way it's got to go. But so 20% of the market's pricing 100% of the wood. So
Yeah,
I
and
mean,
that will change as people start backing off contracts and buying more stuff, and volume picks up a little bit. But the pulp and paper market was similar to this over the last 20 years. All of a sudden, you had so much consolidation. There's a pulp number that prints, but you have 5 6 people doing most of the volume, and all they do is buy or sell at a print plus or a print minus. And
yeah,
there's not really a lot of spot market trading going on, and then there's no distributors or really middle people in the pulp and paper market anymore. They're just big people trading off of an index with big people.
yeah. And you wonder if the lumber market can't get that way as well, because I mean, you think of like OSB producers, for example. There's only about 4 letterheads in the whole industry, and every time you turn around, somebody big is buying somebody else that's bigger or making them bigger themselves. But I mean, everybody, it's almost got to the point now. If you're going to be in the contractor yard business, you got to own your own string of truss plants to go with it. So more and more people are. I mean, there are fewer and fewer independent dealers, truss manufacturers, wood preservers. It's getting to be more and more of these 500 line stores, and if you got 4 stores in your or 4 yards that you have in your business, you're a small business now. It's not you're not a medium sized business anymore. You got to do like 100 million to get out of the small guy pile.
No, so David Stalkop watching from I hope I spelled your name or said your name right, David. Watching from Vienna, Austria. Thank you for your fantastic input to the marketplace, gentlemen. Thanks, David. Uh, Another user, I don't have their name. Howdy from Colorado. Texas. Good call on lumber, not even showing up on the market. I'm not sure what that one is, but I think I understand that one. Well, let's talk about what did you see the big changes are. Southern yellow pine 4 inch seems to remain strong because of all the truss output. Have you seen anything on southern yellow pine over the last this week so far, Matt? After we come back from
Just
the holiday?
just filling in, and I've heard a lot of focus have been talking about component manufacturers, and we'll see a bunch of those guys next week. But the bigger input is treated. I mean, 50% of the product of Southern yellow pine, 40 to 50% goes for treated, and I've been doing a little spot checking lately, and the boxes look like they're kind of adequately filled. They don't look like they're running too low. They've got enough to get by. But if we have any kind of surprise run on treated in the near future, then there's going to be a little bump in that. But it's not doing anything. I mean, I think the market last week was kind of like it felt like it bottomed, and there were prices that went from 100 under print to back to print. So there were some big swings in prices that you didn't see on print. So I mean, I don't think print even caught up for a couple of weeks there, but it was interesting to see that some people, if you were in North Carolina, you couldn't find the bigger deals that were coming out of Alabama and South Georgia and the central zone. But there was a pocket that was kind of sucking the air out of the market, and then it got kind of liquidated, and all of a sudden it's back up to $50 or so.
That was Bob Schneider. So Bob and I were partners. We used to work together at Block back.
Oh,
Shoot,
yeah,
Bob, I don't know how many a while ago. But yeah, miss hanging out with Bob. But Bob basically said, "Yeah, no worries. Heard there were a lot of deals transacted from mills, but no numbers are public right now." Um, and
yeah. Just there's just and you look at some lists, and I see like big mill lists to come out, and you look and see the quantities. There are 8 units, 3 units, 4 units, then maybe one truckload, but it's not these big volumes of lumber that they're offering. So I don't know. The mills are either they're just not feeling the need to get rid of it, or they're just feeling like there's going to. I guess there's no sense in going out and being cheap, and nobody's going to make you an offer for it anyway. So we're kind of in a little limbo spot where I think we're going to be just a little bump here for a fill in, just to get back to get just again bottom of the barrel filling, and then we're going to get weak, and we're going to push the mills into a point where they're going to have to be thinking about the price of the product and how much can they sell, because the fourth quarter is not going to be a big volume time for lumber consumption. So I think we're going to have some rollbacks, and it'll be I think we got a supply side problem coming, or supply side disruption, not a problem.
yeah, well, do you mind if we bring up the FDP to take a
Sure.
look at real quick? If Nick, if you could bring up the FDP chart, I just want to take a look at that. And while you're doing that, Nick, I mean, one of the interesting things too, Matt, is I think we don't have to belabor the point about housing slowing down right now, because I think that's pretty much happening right in front of everybody as we're sitting here. Riley brought up the good point. There's still some pockets of the market that are decent. He's wondering if we will build less units by the end of this year than we built in 2021. And I'm like, if he would have asked me that 3 months ago, I would have said he's crazy, right? But now I'm looking at it, and he's been pushing it, and kind of you have too,
Yeah.
that that's a reality at this point. And I'm like, man, how did we slow down so much so quickly? It's a head scratcher, right?
Yeah, it's hard to imagine going from 1.7 million to 1 million in the same year. But I think that's when you talk about it's not what you're going to do. It's kind of what you're going to end up. That's your seasonally adjusted number that for the next 12 months kind of thing. So I think we're going to be looking at 1 million, 1 million kind of starts pretty quickly, certainly by
Yeah.
the end of the year.
Tim Hansen, this is a good comment, Tim. So many have suggested that we're going to get a bump in the activity and pricing and then doomsday. Those that don't need the lumber today are simply waiting till there's an emergency. Um, yeah, I mean, great point, Tim. I think there's some that are, waiting to jump on. I mean, one big chain yard can come in and bump the price of lumber in certain species $50 in a couple hours nowadays, right?
Well,
Um,
it's gonna be. I think if you have a rash of just an understanding of if the mills forgetting price, if there's just an understanding that or belief there's going to be less demand, significantly less demand over some period of time coming up in the near future, mills aren't going to keep on dumping lumber out. Wait until they got to, get in trouble. They're going to be proactive about not overproducing the market. And like Tim's saying that's going to be when they're in trouble because everybody that's the 2 or 3 big box stores, the 2 or 3 big chain yards, the contract yards, that all they got to do is just say, it's going to be instead of looking for 1 car or 5 cars, it's going to be looking for 50 cars and 100 cars, and the mills are going to see that and go, I don't have it, and there's it was I think we're going to have just a huge panic. I hadn't heard anybody talk about $1,000 lumber before, but I think there's a good possibility we'll be $1,000 lumber before the end of the year.
well, I mean, I don't know what could create that, but one thing, as much as
Shortage of supply.
I don't like talking about it, because it's always, every time I talk about it, Riley calls me or somebody says that never in the long term happens. Like, so there's this talk again about all the rails going on strike, right? And if that happened and everybody wanted wood at once from certain carload mills, maybe that could happen. But we're in a really interesting time right now. We're kind of in the same type of markets that we were in 3 or 4 years ago, and there's a potential we could just be in these where there's less volatility and just slow and steady, right? Which I know not everybody wants to hear, but like my dad used to say, why couldn't the price just go to $1,000 1,000 and sit there, because it makes my gross sales look better at the lumber yard, right? He just didn't
Yeah,
like the volatility. Um,
yeah.
so, Brett Walls, haven't they already started announcing curtailments, and isn't that bullish for pricing? Well, Brett, I mean, this is my opinion. Curtailments are never bullish for pricing because they're announcing it because they can't get rid of the material.
Exactly.
That's my opinion.
The
The
announcements are reacted to bullishly at the beginning, but like all the announcements we've heard about so far, they were 2 months before the curtailments were going to occur, so it was kind of a splash and
I
dry.
remember tracking announcements when I was at a company back in 2006, 7, 8. I'm like, all right, let's track all the announcements, and that should be a bump in production, right? And basically, the market fell off for like 3 years because demand disappeared. I'm not saying we're in that market right now. We actually went from 2 million housing starts to 400,000 back then.
Yeah,
I don't think we're going to do that. So, uh, and I think certain areas like BC, they've got a lot of other issues with less logs, less cutting. You certainly may see some species, and I feel for the people up in BC, because some of those mills just aren't probably sustainable with the log, with basket and the fiber around them. And that's why the Canadians are buying a lot more mills down south, where there is an adequate amount of fiber. Does that make sense, Matt?
Yes, that's going to be an interesting thing too to see with all the new production how that fiber basket stays. If it stays like it is, I think it's going to get picked over a little bit, but there's no way of knowing how fast and how much. But I think the landscape for that's going to change too.
John Breckenridge didn't see it happen, question mark. Starting in March, leads and sales have not supported the market, and that is what you see today. And the fourth quarter will be even slower in Indiana. Uh, Great feedback, John. And the real high areas, I mean, we're seeing Texas, one of the biggest markets right now, still building relatively well. But some of the big yards that I talked down there, when they were buying, 10 cars a month relative, in the first quarter, in the second quarter of the year, some of them are down to 25% of that right now. Now, obviously, they're
Yeah.
running their inventory down, and they will eventually buy. But look at everybody sees the theme here. There's less current as we sit right now. There's currently less business, and the trend of that business is still slowly leaking and decreasing.
Yeah, and the other thing we talk about lean inventories. We're lean based on what heavy was like when business was like 6 months ago, but the lean today is probably adequate for the amount of business that people are projecting or getting. Like John's saying, it's been trailing off since March, and the inventory's been. And that's helped the supply of the car issue too. There's just not as much volume, and everybody's been reducing inventories since March. Everybody's been on a leaning inventory and keeping it lean, and business has been trailing off to go with it. So we're just slowly just squeezing the tube, and all the toothpaste is coming out. And we're getting the smaller and smaller volume left. And I'm pretty bullish on housing for 2023. I think we're going to be a surprise to the upside because if the builders go for 3 months and don't build anything because they're worried about a buildup of unsold homes, there's still a belief that the investment community is going to come to the rescue. But they're just pull their money out. They're just waiting. But everybody that was pushing the market higher now is out for the same reason. It's the monthly payments. They're looking. Everybody wants that payment to be lower. The investment community wants it to be lower so they can keep their rents lower. And the buyers, people that are dwellers looking for a home to live in, want the same thing because they can't afford it, the higher payments. So you go for 3 or 4 months where housing starts contract to like 1 million. The volume of people that want to buy houses 2 months ago isn't going to change from those that want to buy them in 4 months. They're just looking for the opportunity to get back and come back in the market again. And we're going to find ourselves whiplashing back to the upside, I think.
So I saw where Earl Heath was saying here, I agree with everyone's sentiment. What I'm hearing is that the post-Labor Day litmus test is unencouraging. Flat demand, small volume transactions, hand-to-mouth trend continuing. And regular viewers of this over the last 3 months, we've kind of seen our viewers saying this and in seeing it in different markets. So although I think business will still remain decent, the Fed's activity and the Fed's action is doing what they wanted to do, slow things down.
Choke consumers.
It's doing what's doing. So let's see if we can bring that FBDP up, Nick, if you can see it. And we are going to talk about that. Matt, and you made a good comment that I think for 2 weeks you were talking about a market buy, and maybe we saw some last week, but it's already. I'm not seeing a lot of follow through. Are you?
Yeah, no, and my expectation was there was going to be 2 or 3 weeks, kind of maybe at the best, of a little bit of a buy. Is going to be more of a splat than a.
There's the FDP. It's probably backwards, but
that's right. That's right.
Yeah.
And those lines are drawn where the FDP lines are where they fell on the graph, but that uptrend going into week number 42, I don't think we're going to make it that long. I think we're going to reverse here in the next couple of weeks and head down. But the biggest play is going to be at that week number 48, where the 47, where the October, November FDP is. That's going to be the place where, like Tim was, when the people are going to be waiting for something. They wait till they get in trouble, and I think that'll be the time it's going to happen. Accumulation of low inventories and just thinking everything's doom and gloom. But the best thing is going to be, I
Thanks,
think the
Nick.
best opportunity is going to be a big buy in October.
There, Nick brought up the one with actual
Yeah,
color on it. So as much as we were looking at it coming, looking at a buy coming in, it looks like it's kind of already happened. Now, with that said, and a couple of the users commented up here, um, if you do need something, and you certainly can buy in volume or get enough people together, there's mills willing to and distributors like Matt Beamer was saying yesterday, he was trading and he was willing to move some prices around and get some things done. So right now, if you are a buyer and you need to buy something, which there is still business, it's a good opportunity to go in and put together things. We all know how quickly that can change in a couple of days, where you looked at something and all of a sudden everybody comes in and it flips around so quickly you can't do it. Tim Hansen said maybe someone big time in housing may want to suggest to the Fed that we don't need another 0.75% jump right away.
I think it's a pissing match between the White House and the Fed.
And Joe Risch said it looks like there may be less European lumber to go around this fall and winter. What are your thoughts on that and how it affects the overall SPF market? I made a comment last week about there's not going to be less, and every European person sent me things telling me that there would be. So I can only tell you what I see right now. And again, I'm not the person buying it. I see it listed on our platform. I talk to friends of mine. Um, it seems to me chip prices are high now over in Europe. We saw the curtailment from Can 4 last week in Sweden. I hope I have that right. A small curtailment.
Right.
Um, but right now, and another person told me that with the rates and so forth, that 500 U.S. mill was about a break even for for the European mills. I don't know that to be right or wrong. Um, but what I see is there's not a big market in Europe or in other places for the lumber right now, and we still have liquidity over here. I still see vessels coming over. I don't know what that'll look like in 2 or 3 months, but as I see it right now, there's not going to be any more or any less wood available. But if they keep sending the same amount, it'll keep hitting the ports, and we'll keep seeing it. I did have one buyer of it that buys a lot of vessels quite often tell me that this is the first time in 2 years that he's been um, a little bit concerned that he won't have the liquidity that he had before, where most of it was sold before it even hit the docks. He said he's getting a feeling that that may not be as possible, and that just makes sense, right, Matt? That you don't have you don't have people willing to, the fear of missing out where they're buying 10 or 20 cars. Here,
Right.
Jeff Berwick just put 120 cubic meter log cost equals 700 um, East Coast port. Thanks, Jeff. Great. Jeff's like forgot about more about European lumber than I'll know, so he's really dials in pretty good to that. And maybe Jeff can have some better input into that. I'm just telling you
Yeah,
what
that's
people
really,
say.
and actually, I think that's something that's going to be a bigger part of our market. Is there's more European lumber, Euro lumber that's coming in, and you're right. The U.S. is it may not be ideal for European producers, but it's the best option that they have right now.
Yeah,
And not only liquidity wise, but volume wise and stability wise for money, it's the best place to go. So that I think if we're not going to have a bigger supply, it's going to have to be because there's going to be curtailments and we get to a price where we can't absorb it all here, or it gets to the point that maybe they've got some energy issues and might have to shut down, curtail some because of that, which could be possible. But long term, I agree with you that there's the supply thing is. I would think that right this minute, if you had to look at what's going on, there's probably more boats loading to come to the U.S. than any place that there are anywhere else in the world. So maybe, and I know everything got cleaned up a couple of weeks ago, which was kind of good for the market. And I don't know, maybe Jeff and David could tell us like what's coming, how do you find out what's afloat?
yeah, no doubt. And one of the things is there still is liquidity. People are still selling it in the market, especially along those port areas, has really come to like it and use it. So if that ever did stop, it would change some of the dynamics. The market would backfill and figure that out right away. Mike Higgins said, why the big price difference in 2x6 and 2x4 yellow pine? My pure guess is 2x4 is more going into trusses and production for floor and
2x6 is
roof
a treater.
trusses for multi-family and all that. And 2x6 is probably a big treating item, Matt. I
Yeah.
don't just get, yeah. Although
The
it's used in
2x6 is going to be more of it's becoming more of a component manufacturer item as of late because of that price spread too. But I think that's it. Basically, 2x6 is a treater item, 2x4 is a component item. And there's been more trust business in the last few months.
Yeah, no doubt. So that kind of runs up against what I want to talk about, Matt. What's your thoughts? I didn't mean to run over your time. What are your what are your thoughts on it? Yeah. So what else? So if they want to sign up for Layman's Lumber Guide or his scouting report, Matt, maybe you could just tell them. Yeah, Bob Myers, 2x6 is easier to make too.
Yeah, get more. Well, 2x10s are even better than that. Just get more footage coming out for the length of time it takes a board to run through, but you don't have big enough trees to make all 2x10s.
If you want to set, you go to matt@laymansguide.com, send him an email. He'll get you cooked up on the scouting report. We finally launched this week with the MX Mickey platform. Already got a bunch of matches done, Matt, so we're excited about that. A bunch of your users have been on using it.
I have a question about that. Do people need to re-register, or is it still the same? If they're registered, it's still good?
Still the same. All the passwords should still work. We are in the process with their engineers of building out a new platform. They've taken that over, but we are still running our platform along with theirs. But your users should feel no different. They go on with their password. If their password doesn't work, where some of them haven't, they can contact myself or Nick or send us an email, and we'll reset it for them, and they'll be on in no time. But everything is set up good, and so far we launched, I think, last Friday. A soft launch on Thursday, and we worked through a few kinks, but now it seems to be running rather well. So you can come to materialsexchange.com. We used to have mxlumber.com, but for some reason we haven't got that URL working again, but not a big deal. But we have materialsexchange.com. Come in, register if you haven't. Otherwise, log in and start listing a bunch of pine up there today. We've actually moved a bunch of southern yellow pine already this morning.
What, just curiosity, what, it's only been a week, but what do you feel like that the consumer can expect to see differently on the platform?
Well, I think what the consumer will expect to see is one thing: we have a lot more technical support and more back office support. So anybody that used the platform is going to realize that the speed of the way your transactions happen after they match in the platform is going to increase, and any re-invoicing and all that will be smooth. Because what people don't like to see, the feedback is, Matt, once they do something and pull or push money, they don't want to hear about it again. They just want the load to show up and don't want anything. They don't want to take resources away. That's the whole thing. So I think what you'll see is it saving time. And in the next 3 months, you'll see a completely new platform where we'll have a whole bunch of the new gen things we've been talking about forever. Random links you'll be able to look at more. You can change things real time. We'll be able to change freights real time, where it takes an overnight now. So it'll be a better e-commerce shopping experience. So just like cell phones have gotten better over time, cars have gotten quicker, our platform is going to help the lumber industry do things quicker. And at the end of the day, everybody goes, what's the real value? We're going to help you save time and money and digitize a market that's historically going to still have call around, but now you can meld those two, and one person sitting here that used to be sitting there feeling that they're kind of isolated now can have access to a lot of other people, still talk to human beings, but also have the digital market that they can interact in. Yeah. Good. So it's good. But yeah, that's what I have today, Matt. So with
David David Stalkup has a little update.
Oh, yes, Dave. Break bulk carriers are trying to avoid Northeast ports in Houston due to congestion. Yes, I agree. I've had some situations down in Houston myself, Dave. Cape Canaveral and Lake Charles still have space and aren't experiencing congestion that other ports are experiencing. European mills can't get booking for smaller volumes. The congested ports in the U.S. aren't willing to sort by grade and length, which is causing extreme issues at the ports and delaying shipments. So many of these ports just don't have the infrastructure for having multiple mills and vessels coming in. Yeah, Dave, I've seen some ports that work really well, that they're seamless, and then I've seen some ports where it's almost like they're getting a big load of brake bulk in there, where they think a big scoop and put it on a truck, and they don't separate the species, grades, and all that. And some people don't realize sometimes these
Is that
ports.
why they're going? Is that why they're taking it off site, away from the ports, to lumber
Yeah,
to yards closer by?
there's some people on here that can comment on that. I'm not going to mention any names, but what they've been doing is bringing it inland into other reloads the minute it hits that port, and it's maybe a slight extra cost, but over time, at some of the places, it's a lot easier for them to maintain that inventory at an inland historic reload facility than at a port that's bringing in, like I said, cars, pulp and paper,
Yeah,
cotton, all that kind of stuff.
yeah, good.
All right, everybody. Well, Matt, thank you for the time today.
Thanks, Ash.
We'll get going again, and we'll look forward to doing this again next week.
Thank you, guys. Thanks everybody for your input today. That's pretty cool. Thanks a lot.
Yep. Thank you.
Yeah.